Right now, we're going to be speaking to Jason Mercer from TREB, the Toronto and Region Real Estate Board, about that inflation data. Jason, thanks for joining us. Appreciate it.
No problem. Thanks for having me on.
I have heard this inflation cycle referred to as Wolverine inflation, similar to what happened in the 70s, where we had this massive boomer generation that had, a lot of money to spend on, and they were spending it on too few goods, and that kind of caused a ripple effect. And it lasted for quite a long time. And now we've got the same similar demographics with this millennial generation that's here now. And even though we've got good, short-term data here, we could be seeing a long-range, long-game problem. What do you think about that?
Well, I think it's definitely going to be interesting to see, how the Bank of Canada interprets this data. I mean, this is the last inflation release before they make their next decision on interest rates. And in their last meeting, they did say they were front-loading it with a 100 basis point hike. And so with a bit of a moderation in that headline number, it'll be interesting to see their take. But, I think you're right. There's different pieces that you can take out of this announcement. If you look at the headline number, both year over year and month over month, we've seen a deceleration in price growth, but then when you start to break it down into the components, you see that most of that was on the back of gas prices. And so if you think about other consumer goods like groceries, you're still seeing prices up. Some of that's on the back of the conflict in the Ukraine. But then, on top of that, you're still seeing a lot of spending on things like, holidays. So air travel, hotels, you're seeing people eating out, and the price of restaurant increasing as well. And some of that has to do with the hangover and the high savings rate during the pandemic. And on top of that, this release also pointed out that you're seeing an uptick in wage and salary growth, moving closer to in inflation. And so you kind of have both sides of the coin where, gas prices certainly contributed to the deceleration, but you still are seeing prices rising in other categories. And, it'll be interesting to see where the bank goes in terms of borrowing costs.
Right. Well, let's focus in on that. And this is your level of expertise here. The Bank of Canada, the next interest rate announcement comes September the 7th. What effect could we see on the bond market and on mortgage rates?
Yeah, I think certainly if you think about the ownership market, you have seen a lot of households, move to the sidelines to sort of reassess their situation. From my perspective, there's a lot of households that can still afford to purchase a home even in this higher interest rate environment, but they're taking a bit of a wait and see attitude to see where prices go, and also to perhaps reassess the type of home or location that they're looking at moving forward. You've also seen, the population continue to grow in the Greater Toronto area, and you have very tight labor market. You got to go back to the early 1970s to see an unemployment rate so low. And so people are moving here to take advantage of those job opportunities. But increasingly, they've turned to the rental market, at least in the short term. And so that's been a contributing factor to inflation as well, where we're seeing double-digit increases in average rents.
Jason Mercer, Chief Market Analyst with the Toronto Regional Real Estate Board. Thanks so much for your time. Appreciate it.
Thank you very much.